Hello, welcome to AccountingExL. This is a tutorial on how the intangible assets schedule works. So to get started here, the intangible assets schedule is just one tab. You can see it's populated with a couple of common intangible assets: goodwill, trade name, domain name, customer relationships, and database. So the first thing that I think you should do is copy this tab over to your AccountingExL workbook. Um, it puts it all in one file, makes it a little easier to keep track of. So to do this, you just right-click on the tab, Intangible Assets, click on Move or Copy, select Create a Copy, and then you can, from the drop-down, you can select your AccountingExL workbook, and then click on Move to End, and that'll put it into your workbook. So now you can see you have the journal, trial balance, account detail, lists, and then intangible assets. So let's get started here on the journal. A lot of these transactions were pre-populated from the AccountingExL tutorial. If you haven't seen that, I suggest you go check it out. It kind of walks through how we accumulated some of these transactions. But for this tutorial, I just wanted to kind of show how we got some intangible assets on the books. So I recorded this journal entry down here on 5/31. So you can see that I recorded a $2.4 million entry. $1 million of that goes to goodwill, 500,000 goes to trade name, 250,000 goes to domain name, 450,000 to customer relationships, and then 200,000 to database. So once you record your intangible assets on your journal, what you want to do is put these on your intangible assets schedule. So to do that, you just click on intangible assets, and here you can see that I've populated it already with the journal entry that I created. But your purchase date, you want to put in the purchase date. So in this case, it'll be 5/31/15. 5/31/15. And then here, I just made up some useful lives. So the number of years, I just go ahead and put those in here. So goodwill's 10. Trade name, 5 years. Three years, 3 years, and here is 4 years. So now what you want to do is you want to put the useful life in months. So 120 months there, 60 here, 36, 36, and 48. So now you got your life in months. So now what you want to do is you want to take that journal entry and input the beginning balances. So to do that, you come to the balance column, and here is where you're going to put your balance of your original balance. So this is $1 million for goodwill. 1 million. 500,000. 250. 450. And then 200. And what that does is it gives you your monthly amortization expense here in column O. So then what you want to do is you want to record your journal entry for your first month of intangible expense. So we'll put this as of 6/30 for the first month. And then go ahead and record those 8/33, 3/33. 8/33. 69/44/44. 12,500 and 4166.67. Okay. Then you want to record the rest here as credit. So the debits are going to be your expense, and the credits are going to be your accumulated amortization. So in this example, I'm making it so that it's a 1-for-1, so I'm not recording everything. I'm recording them all in different accumulated amortization accounts. So what you want to do here is select your accumulated amortization accounts. So the first one was goodwill. Trade name. And if you expand this, you can see the whole account. Domain name. Customer relationships, and then database. And then I create an expense account for amortization expense. Okay, so that is how you record it. And once you get that done, you want to update your trial balance. And once your trial balance is updated, you can move these into position here. And your amortization expense is down here below. Okay, so now what we have here is we've recorded our amortization expense for the month of June. And what you could do, and I just did this for the example, but what you could do is you could consolidate, if you had one expense account, you could consolidate all these and just book a debit of $40,000, $40,277.77 as your debit, so you don't have to break all these out. So then what you want to do is to get this to match up, so you have your original amount, 1 million, and then you have your accumulated amortization for goodwill of 833, same for all the rest of them. So then what you want to do here is you just come over and you say months amortized, 1, 1, 1, 1, 1. And then what that does, you'll see here, this balance matches up to your trial balance. That's pretty much it. So if you wanted to record another entry for the next month, you could record another entry. You'd come over here to Intangibles, make all these 2, 2, 2, 2, 2, and then you have all of your balances here. So that's how you use the Intangible Assets tool schedule. Hope that you thought this tutorial was helpful. If you get a chance, go to the store, check out some of the other things that we have, check out some of the other tutorials and some of the other videos. I think you'll find them helpful. Thank you very much.